I was talking with a buddy of mine about trading options, and I guess he assumed because I'm a wealth manager and all those trading platforms say that wealth managers don't know how to invest. He assumed I didn't understand options, so I had to let him know I am not your typical wealth manager. I actually manage the money. And so this episode, we are talking all about options and how to make money using options. Before we get into it, this episode is brought to you by Stonehill Wealth Management. Investing doesn't have to be stressful. My team at Stonehill Wealth Management works with clients to help them create a financial and investment strategy for their future that helps them stay on track with their goals and be confident and relaxed about what they're doing. Imagine you found a house you love, but you're not ready to buy it this second. Maybe you need to sell your current place first, or you're waiting for a bonus at work. No problem. You can use an option to lock in the price for a little while. Think of it like putting a reservation on the house. You pay the seller a small fee for the option, and they agree to hold the house for you at a set price for a certain amount of time. Now let's say housing prices in the neighborhood go up. Your option becomes valuable because you have the right to buy the house at the lower original price. You can go ahead and buy it knowing you got a good deal. But what if prices go down? No problem. You can just let your option expire and buy a different house for a cheaper price. You only lose the small fee you pay for the option. Let's break it down even more simpler. You have the choice, but not the obligation to buy the house. It's like having a maybe button instead of just a yes or no. Options have an expiration date, and you have to decide before the deadline what you're going to do. Options cost money. You pay a small fee called a premium for that choice. Why use an option? Flexibility. It gives you time to decide without worrying about the price going up. Protection. It can protect you from losing money if prices go down, and we'll get into that for the stock market. Potential profit. If prices go up, you can buy the house for less than it's worth or even sell your option to somebody else for a profit. Options can be tricky, but they can be useful tools for both buying and selling things like houses and even stocks, bonds, crypto, and commodities. Let's get into trading options. Trading options is like any other type of investing. It's an art form. There's no single right way to do it. It all depends on your own approach. Here's how I like to do it. I keep things simple. I start with a big picture idea of where the best opportunities are. I think of it like gravity pulling money towards the areas with the most potential. And right now, that's the digital economy in my analysis. With that in mind, I find the leading companies in those areas. In the case of crypto, I find the strongest, most dominant blockchain, which is Bitcoin. I mainly invest in those top companies and blockchains, but I use options to boost my returns, especially when they're cheap after a market downturn. Let's get into the two main types of options: call options and put options. A call option, these let you profit when the price of something goes up. Put options let you profit when the price of something goes down. Usually, after the market goes down, call options become cheaper because people are less optimistic. During a strong market upswing, put options become cheaper because people are optimistic and don't expect prices to go down. With trading options, patience is key because options move a lot more than the underlying asset. It's like being a lion waiting for the perfect moment to pounce. Timing is everything. I like to use fundamental and technical analysis to fine-tune my timing. Think of fundamental analysis like checking under the hood of a car to see if it's a good buy. Technical analysis is like using a map to see where the car is likely going. Fundamentals help me choose the right investments, while technical analysis helps me understand how the market feels about them so I can know when to make my move. Here's an example of how I put them together with an example of options I recently bought. I'm not going to name the company because it's not really important to this example, but it's a Bitcoin miner. I believe in Bitcoin's future and them being the dominant blockchain. And this company is doing well, but the market and the company has been down lately. The company specifically down lately a lot. I use Bollinger Bands, which is a technical indicator, to see that the market is still nervous about this company. This means the stock price isn't moving much as usual, which suggests it might be a good time to buy, and I checked the options and they were pretty cheap. So if I invest right now, or when I bought them, $10,000 into some September 2025 call options, which are longer dated call options, I could potentially triple my money if the stock only doubles by then, which is pretty easy because if we're moving into a full Bitcoin market as I expect, this company does more than double, and so it's a pretty good bet. What's also important is I like to have a minimum 3-to-1 risk reward expectation, which means for every dollar I risk, I can make $3. And I buy options with longer dated expiration dates. And why is that important? Because if you look at the stock market or even the Bitcoin market, the market is up more than it's down. So when I buy an option that's basically a year out, the odds are already in my favor that the markets are going to be up over that period of time. And then when I buy it, if I'm buying it out of correction, then I can sort of estimate what the price point will be for the option in the year and the underlying asset because I'm buying a dip. So it's like running a casino. You want to make multiple bets to make sure a few losses don't wipe you out, and you want to be very detailed on your odds management and know your odds extremely well. Options can be a powerful tool for investors, but they require careful analysis and lots of patience. One of the things that I talked to my oldest about, both of my kids have a very fast thinking mind. My oldest is older and he's into STEM stuff already, and so his mind is moving very fast. And so a lot of what we talk about in every aspect of life is timing. That's something that it took me a while to learn, but timing is important, meaning there's always opportunities around us, but the opportunities that are in our sweet spot of what we know and that's unique to us, those come in cycles, and they're always coming in cycles. And once you learn timing, you realize, all right, I can try to speed through something that is not really an easy pitch for me, or I can just let timing work things out and swing at the easy stuff. And when I swing, I'm going to hit it further than me trying to hit all these random balls that are outside of my strike zone. And so timing is very important in investing in options or just investing, period. Odds management is also very important, which is part of understanding timing. It's like I had a friend where we played. I didn't really play spades growing up. I played dominoes, but not really spades. I started playing in the last couple of years, and I was explaining to a friend. I was like, "Hey, listen, I manage money for a living, right? Statistics are like music to me. Like I love stats and odds, right? It's sort of my natural gift." And I was like, so once I play the game a few times and I learn the odds, it's just the odds management game, right? Somebody can be playing their whole life, but I am very good at odds management. And if you just know when to play and when not to play, and you can read people, you can apply that to any odds game, poker, gambling, investing, fighting, basketball, right? It's just odds management. And so options, when you're playing with options and they have lots and lots of leverage opportunities, which means you can make a lot of money, but you can lose a lot of money, it's very important to have that ability to respect timing and not allow the impulse of your emotions drive you to a decision that's out of alignment with your timing. If you want to learn more about investing, subscribe to our newsletter, become part of our inner circle. It's packed with my step-by-step thought process around investing. Plus, you pay what you want. No tricks, just valuable information to help you feel confident about your money. The link is in the description, or you can go straight to wealthbuildingmadesimple.us. Go ahead and like, subscribe, and hit the notification bell for more insights. Thanks for hanging out. Go be fruitful and multiply your money.
Philip Washington Jr. is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.